Well, hello again. Welcome back. It's been a day since I've seen you guys. It's Joe again for the 14th of February. Happy Valentine's Day. It's been a fun day yesterday and today as we had polar opposites. Let's get into it. I'm going to talk about some stuff. Make sure you take responsibility for the outcome. You guys know the drill. The things I'm going to be talking about is the meaningful news of the day, what the markets did technically and where we're at, and some trades to share with the community.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's break down what happened today.
And as we get into the market analysis, I'm actually kind of glad, or hopefully you guys were listening to what I talked about yesterday. The reactionary move is just that. It's a reactionary move. So the daily news, yesterday's selling pressure subsides today as the markets post gains. This is a reaction off of a bad CPI number, and anybody that was thinking about selling did, and they all did it once, and you usually get this quite often. Big spike in the VIX, big volume move, and a pretty good sell-off. It was a pretty decent percentage for a one-day move, but it's very quickly forgotten. I've got more to add to that because it doesn't mean that the selling is actually over. It just means that initial reaction was just to get everybody who was froggy to jump, and they jumped. So now we're left with kind of what's in front of us. Volume is lighter than yesterday as the VIX drops back below 15. So this was an absolute reaction and then a calm. At least from yesterday to today. Where it goes from there, it's going to be a little bit more interesting. How do we finish? The Dow put back, the SP put back, and so did the Qs. Everything put back a little bit from what they took off. The Russells, I think, dropped 4%. They put 2.33 back. So just a bounce across the board. And not a very big one. I mean, the S&P did about 1% there, and the Qs did 1.3%. But you're going to see volume-wise, as where the majority of the volume was in some of the stocks that had some of the larger gains. And I referred to this yesterday as profit-taking, a round of it. Well, the stocks or the sectors that had the most profit in it should subsequently have the highest volume, right, if it is a round of profit. Now, that's all just kind of hearsay. I don't have to be right. I just need to follow the charts. So where do we go here? Advanced decline line, this was 86% decliners and 11% advancers. Now we're at 79% advancers and 16% decliners. So almost flipped, right? About 5%, 6% difference there from yesterday to today. So another bounce. And then above below the 50-day moving average, skewed to the above the 50% there at 56% above and below. All right, let's just get straight to the fun part. Moving into the chart, you're going to see that we had a pretty good bounce. And what's interesting about this bounce is that, to me, it looks kind of like a bull pullback that has been confirmed. Yesterday, I did talk a little bit about how this finished. It was a hammer candle. The volume was a pretty, it was average on the SPY, but it was super high on the Qs. Once again, what had the most profit in it? Oh, it was probably the tech sector. We did move off of the lows into the close. I wanted to talk about that point that I brought up yesterday, and that kind of shows this hammer candle. Maybe that we would get an up day or at least a stop at the downside, which we absolutely did. So this is almost a little bit of a confirmation of a gap pivoting point on a hammer candle. I would not be surprised to see if this goes right back up and we continue on like we did before. I made mention of this yesterday, this same pattern, and there it is again. Doesn't mean that we will. We could see a little bit, another round of selling. What could happen is with the volume the way it is, and we're going into an options expiration Friday for February. It's going to be the full month expiration. I don't know if that's going to have an impact to it. But where we sit right now, earnings are out. We've got a good first quarter coming on. We're very strong, and there's not much to really do with these stocks unless you want to pull some money out as we get into March. I don't know, right? See, this is all the hearsay stuff of trading. All I care about is what's in front of me here with this chart. So where we sit, it's right where we were on, let's see, 2 days ago, a day before that, The outlook's still the same. There's really not much to go off other than that. Let's go to the cues here. Same thing. I do want to make mention of this. I thought was pretty interesting is the size of the volume comparatively to some of the others out here. Right. So take a look at this bad boy here. Pretty good volume. A lot less today. Volatility did drop significantly. I actually have that chart coming up here in a couple of slides, but it's the exact same pattern. Had this huge gap. This one actually came back up to close above where it opened, still down for the day, but a positive move right at this level. So yesterday I talked about, hey, a deep pullback could happen. This level is a good point for this to turn. This level is a good point to this turn. When we get down to this 398 area, it does threaten the 50-day. This would be kind of my make or break for an acceptable pullback for me to stay bullish. We also have a pivot point. You can see right here, just above that, right around that what do you want to call that? 415, 417 area. But we might just kind of park it here. I would not be surprised to see a little push and pull if there's another round of selling that either the markets want to do or pull some profits out. They can. There's nothing to say that they can't. But based off of yesterday's move and what we've done today, there's really, I'm not going to take a stance here. There's really no reason to change anything. So let's move to the heat map. And you can see that everything that was taken off, everything that was red is now green. Not all the way back, right? It's not like we completely erased yesterday's move to the downside, but we did substantial damage. I should say not damage, but a pretty substantial recovery on the majority of that move. A lot of these charts, folks, had not changed. I went through a couple yesterday, and I saw, okay, we're down quite a bit, and I was looking for bears breaking down or bulls that are falling apart, and I found none. Bulls are still bulls, bears are still bears. In fact, I thought it would be fun to actually use the same charts from yesterday and see where they went. That being said, let's take a look at the VIX real quick because there is your panic button. This is kind of a funny thing to see. And that's a pretty good shot, all the way up to $18 here. Came down to close at about 16. So overall, a nice little shoot to the upside based on a disappointing CPI number, whatever you want to call it. And then we have this inside day, or this is called a bearish Harami pattern, right? A pregnant bear. This pattern usually follows a move to the downside. Doesn't mean it will. It just says it usually does. Now let's go back to pattern recognition. We've seen this before. These markets like to panic, don't they? They like to shoot up all the way. The end of the world's coming, and then they come back down, and then they come back down. And so this is a little different at this area just because it's a little larger. Maybe we see another round of profit taking. Maybe we get another little spike up to 17, and then maybe it slowly comes back down. I wouldn't be surprised of that. But for my serious bears out there, the economy is not weak enough for this to be a bear market. So yes, I will see another round of profit taking, and I'm expecting some consolidation or another pullback. If not this month, maybe next, right? That's fine. But it's not going to fall apart and implode. There's got to be something a lot more substantial for that to happen. Thank you for listening to my soapbox. Let's get to where my market outlook is, and lo and behold, it has not changed. Made mention of, hey, this is a move to the downside. I don't like to make decisions on big days. This was a little bit of a hammer candle. I made mention that this could be a bull pullback. So far, it looks like it wants to be. It's not. I'm not going to say it is, right? I'm not going to say it is, but I'm not going to change my outlook of this +1, and I'm still going to stay to +3, just because this didn't even really come back and touch the rising 20-day moving average. So I'm just going to stick with the outlook that I've had for the last few months. It's been working pretty well, or the last 2 months, I should say, few weeks. And hey, if it's not broke, let's not go out and try to fix it. Okay, so for fun, I thought it would be neat to, since I did this yesterday, let's take a look at the trades that we looked at yesterday. I had Southwest Airlines for the bull side, and then a bunch of materials and energy on the bear side. But I went to the specific charts we looked at, which is obviously Southwest and Mosaic, and let's see what happened. So here's Southwest Airlines. We took a look at it. I think it was butting its head up against a resistance level. Thought it would be kind of cool to maybe play it if it could leak out above this, play more of a diagonal play or some sort of a credit spread sideways to up, and it absolutely confirmed today to the upside. Doesn't mean that it's going to go gangbusters here and hit 35 or 36. I truly still believe it somewhere like a 32, 34 diagonal spread, or if you want to go to 35 is fine. We are going into an options expiration cycle, so you might want to go into March for this if you want to kind of slow play it. But it worked out, looked pretty good. Nothing really changed, right? Bull move, bull stock, and it confirmed to the upside. So let's take a look at our bear here. This is Mosaic. This is a bear stock, bear sector. Didn't really go gangbusters to the downside, but considering that the markets did bounce across the board, this is still a little ominous, which is interesting too, as we actually got a little bit more volume today. So I don't think I said, hey, I don't think it's going to hit 26 anytime soon, but I do like how it's got this slow bleed, and it has for a while under that 20-day moving average. So also kind of a diagonal slow play to the downside, right? It's interesting that we would be looking at kind of sideways to up and sideways to down when we see a lot of volatility in the markets yesterday based on that CPI reaction. Today, back kind of to normal, but that's kind of where I want to go with this. We want to kind of quiet the noise and just play with what's in front of us. And what's weak stays weak, and what's strong continues to stay strong, and try not to be too reactionary to any one event. So tomorrow's outlook, no follow through from yesterday's bear move. That's where I'm going with that. Now, that doesn't mean that we can't get another round of selling. It's just that initial froggy jump. Everybody who wanted to get out, got out, and today there's really no follow through. It doesn't mean that there won't be another round of profit taking to come, but there could be more opportunity to buy if there's some traders out there that want to put money into it. So the next couple of trading days going into that options expiration cycle should give us a lot more insight on any changes to sentiment, or if we're just going to stay bullish. So I'm not going to really do much after a day like yesterday. I didn't do anything yesterday. Didn't want to jump in or out of anything. So I'm comfortable where I'm at. And so far, nothing's changed as far as my outlook. So follow your technical indicators. Let's make sure that we do that and not our reaction. Options expiration, once again, is this Friday. We do have jobless claims, Empire State and Philly Fed manufacturing numbers, and retail sales. Folks, if these numbers come in strong, there's less of a reason for us to go into bear mode. The CPI was disappointing to traders that thought that we were going to get a rate cut. That's it. We are not weak. The economy is very strong. And so unless we see jobless claims increase, manufacturing fall apart, retail sales slow down, then we can say that, maybe there's something to worry about. Maybe we can warrant a rate cut. And if that happens, then we're probably already too far in front of the ball, right? Things are going to get worse. Just follow those numbers and take them for what they are, but we got to focus a lot more on our charting. Check potential trades, as always, for earnings before you get into them, unless you're playing for earnings specifically. And there it is. 2 days in a row, guys. It's nice to chat with you again, and hopefully you're getting a lot out of this. And I'm looking forward to talking to you guys next time. Bye, everyone.